Good morning or afternoon to everyone on this call today. Happy Wednesday. Thank you very much for joining Webinar Wednesday with Sprout Mortgage. My name is Leslie and I'll be your facilitator for today's session. We do appreciate your early attendance. We will get started in about a minute and a half, just so that everyone who would like to join have the opportunity to do so. Please sit tight and we'll be back on the line just shortly. Thank you. All right, well, thank you very much for joining today's Webinar Wednesday session with Sprout Mortgage. My name is Leslie Nguyen and I will be facilitating today's session. We're going to focus on the 4 national programs, the programs that Sprout Mortgage has to offer that's available to your 4 national borrowers. In the instance that you weren't able to register your email address and you would like today's materials, please leverage the chat box that we have and drop in your email address so that we can send the information to you. With that said, we'll go ahead and get started. All materials from today's session will be available to you by end of business day. For whatever reason, if you do not receive it, please reach out to your account executive as they will have copies of it too and they can send it your way. So we'd like to just go over the entire product line that Sprout has to offer, and I'll point out the programs that are available to our 4 national borrowers that we'll be focusing on. But this right here shows you the entire product line that Sprout offers. We have a bank statement program that allows a borrower who's self-employed be able to utilize the income that comes off of their bank statements, either 12 or 24 months of business, personal, or a combination of the two. Or a self-employed person who receives a 1099 document can utilize that as their income documentation. We have 2 programs in our full doc portfolio, our E1 Expanded Jumbo. This is a prime jumbo program that allows competitive financing for those loan amounts that are larger than the conforming loan amount limits. This goes up to $3 million, does require the borrower to have 2 years of income documentation to qualify. The J10 Full Doc program, Select Jumbo, is a true non-QM Full Doc program. This is a 1-year income program that does go up to $4 million. A borrower can have less than 7 years from a recent credit event, much more relaxed guidelines for that borrower who's looking to borrow a larger sum of funds. If you have a borrower that is able to utilize their asset portfolio to qualify, we have our asset depletion program, A11. We ask that the amount of the assets is greater than the desired loan amount. At minimum, that asset account does need to be 110% more than the loan amount. We'll take that amount and divide it by 60 months to determine what the income is. What's great about this program is that the borrower does not have to draw on the funds in order to utilize it. If you have a borrower who's looking for an investor property, and really does not want to provide their personal income documents to qualify, we do have a debt service coverage program, or I-10. This requires that the rents do need to be more than the proposed mortgage payment, as long as the rents are 15% greater than the desired loan payment. That is how the borrower will qualify. So in these programs that we just discussed here, these 5 programs, 3 of them are available to foreign nationals. Our J10 1-year Select Jumbo Full Doc, our A11 Asset Depletion Program, and our I-10 Debt Service Coverage. And these are the 3 that we're going to be focusing on today. So in addition to having your account executive as your main point of contact, we also have additional services that are available to you that really does set Sprout out as the advantageous investor. There's a loan scenario team that is available to you. This is a pre-submission group that is set up to be able to provide guidance, to help you calculate income. If you are writing a bank statement loan with us, we will do the calculations for you. If you have guidelines or scenario clarifications that you need, this team can assist you along with your account executive. You have the iQualify tool, which is located on our website. This helps you to be able to select a program quickly and be able to get pricing details straight from our website without having to go through like your whatever pricing engine you have, like Optimal Blue or Loan Sifter. We have an exclusive AUS system called Acorn that really intuitively reviews the borrower's loan file for pre-qualification. It's currently available 3 ways: on Calyx Point, Encompass, and a web-based version. If you are interested in seeing how you can really take control of your files and be able to see that a borrower pre-qualifies and what those conditions look like, please reach out to your account executive so that they can demo it and show you how it can be set up. As an approved client of ours, you also have access to our materials so that you can market yourself and your community through the Sprout Marketing Store. You have over 20 designs to choose from that will allow you to white label the flyers and make the materials available. And it is complimentary, and along with options to be able to print and get tchotchke related items. You also have access to my team, the business development team. We are a training resource that will facilitate trainings for you, for your clients, for your branch, whomever the audience is, to help promote and understand our products and how they work. And then lastly, know that we take a common sense approach to our underwriting methodology, so exceptions are possible. Sprout Mortgage is willing to review a file that may not meet all the guidelines, but do have strong compensating factors. So please, if that, before you actually have to decline a file that you are trying to structure, perhaps we could give it a second look. And if that is the case, speak with your account executive to determine if an exception can be made, and what they'll do is submit the exception on your behalf and then allow us 3 to 5 business days so that our team can review it and determine if we can make this loan a yes. The programs that we offer have really strong universal features. They are as follows. Cash out proceeds can be used to meet the reserve requirements on all programs except for our asset depletion program. We do ask that the borrower does have at least 3 months of their own reserves to provide towards the reserve requirements, and whatever the balance is can come out from the cash out proceeds. We don't charge mortgage insurance on any of our programs when you go above 80% loan to value. We do not adhere to loan limit restrictions. That's where our loan program could then be to save the day. We do not have a limit on the number of properties that the borrower already owns. All programs except our E1, where 4 properties is the maximum a borrower can have. We don't require previous landlord history on our investor occupancy properties. On our investor occupancy debt service coverage program, the borrower can qualify off of the note rate, and that includes the interest-only payment instead of the amortized rate. If your borrowers have Airbnb income, they can use it towards qualifying income. When you have a borrower that's going with one of our full doc programs, the primary wage earners middle score will be used as a qualifying score. Escrow waivers are allowable. We'll have to, with lower LTVs, that is where the escrows are going to be allowable. And then foreign national programs are going to be available on the J10, A11, and I10, which is what we're going to discuss today. Applicants who will have a work permit issued by the United States can now actually be qualifying as a U.S. person and no longer deemed as a foreign national. Here's a quick look at our iQualify tool, because after we go over the programs today, you may have a full grasp of it, or perhaps some of the information may be a little fuzzy. So you may want to leverage the iQualify tool just to give you a quick answer as you're trying to structure a deal, or you don't have the time to pick up the phone and speak with your account executive. Know that this tool is available to you. All you have to do is log on to our website, www.sproutwholesale.com. Here's a snapshot of the home page. At the top, there's a tab and it says iQualify. Click on that. Takes you to this screen that has these data points, all the normal data points you would enter in when you're trying to run a pricing product scenario. Fill everything out, hit submit. If it fits inside of these parameters, then a program suggestion will appear. If one does not, then it actually has a phone number to our loan scenario desk where you can call and we can discuss the situation of your borrower and they can help determine what program is going to be the best fit. If a product is recommended, then you can take it a step further and get pricing. And then once you click on the pricing screen, you'll be able to see a snapshot of what that program is going to look like in both borrower paid compensation as well as lender paid compensation. If you are using the pricing screen for the very first time, it will ask for your email address to authenticate who you are so that the proper LPC margins will display. So do not worry if you have to plug in your email address. Know that this is for this purpose. We just need to ensure that we are displaying the proper information to you. Plug in your email address. We'll email you a 4-digit access code. And then once you enter that in, you'll be able to see all the pricing details. Okay. So today we're going to focus on the programs that are available to everybody who has a visa in this green box. If you have a borrower that actually has a visa that is in one of these categories, they have a valid social security number, they have the eligibility to work in the U.S. as evidenced by an EAD, then they are actually considered a U.S. person and will actually qualify for all 5 programs that we have to offer. But today's focus is going to be for those that have what we call temporary resident visas in these categories here. And they are limited to just 3 programs. If you currently have a borrower that has a Class A or Class G visa, then they actually will not be eligible for any Sprout programs as they do have diplomatic immunity. So the 3 programs that we're going to focus on today for our foreign national borrowers is going to be the J10 Select Jumbo Full Doc program that's only asking for 1 year of income documentation to qualify. The Asset Depletion program, where a borrower can use their asset portfolio to qualify as a source of income. And then the Debt Service Coverage program for an investor property. The first 2, the J10 and A11, does allow a borrower to utilize that program for either a second home or an investor occupancy. This I-10 program is going to be investor only. And again, the borrower will need to have a visa in one of these categories to qualify for the foreign national as a foreign national borrower. Our list is pretty wide in regards to where the borrower's home country is from. The current list here, these are countries that we will not allow financing for borrowers if their current home country is listed here. Will you need to run a credit report regardless if the foreign national has U.S. credit trade lines or not? And the answer is yes. We do require a credit report in the loan package, regardless if the foreign national borrower has U.S. credit trade lines or not. We aren't requiring international credit reports. We are only interested in determining if they have any U.S. related debt. What you'll do is run credit on all foreign national applicants that are going to be applicants on a Sprout mortgage loan. And please see the next slide on directions on how to run credit. So what we understand that your borrower may not have a social security number. So in that case, we ask that you plug in all ones or all nines in the social security field, and that you follow this format here with regards to a address. And as we know, those data fields have to be entered in order to run a credit report. So in the social security field, ones or nines. In the address field, follow this format, and you should be able to run credit. The credit report will either yield some credit information or zero trade lines, and that's okay. If they don't have any trade lines whatsoever, that is fine. You've done your part, and the borrower can still potentially qualify. If they have credit that they are building in the United States, then they will need to get to whatever the minimum credit score is for that program in order to qualify. And we'll get into that in just a little bit. We also would like for you to include the borrower's home country's address in the 1003, as this information is necessary for all correspondence once the loan has been made. So as a recap, plug in all ones or nines in the social security field. Plug in this information if you don't have a current U.S. mailing address for the borrower. Run credit, and then also capture the borrower's home country's credit in the 1003 as this information is needed. An additional requirement that is required of the foreign national borrower is that 10 days before we go to close, this will be a condition for approval, is that the borrower must set up a bank account with one of these banking institutions that's listed. This account will be used for our ACH withdrawal of the monthly mortgage payment. So they can have a wide list to choose from, and they do need to set this up at minimum 10 days before closing. So now let's get into the programs that are available to the foreign national borrower. As a full doc spectrum, if a borrower can prove their income by full documentation, they have our J10 one-year full doc program, or the A11, which is the asset depletion program. The characteristics of our full doc J10 program is that the loan amount starts at $100,000. The loan program does go to $4 million, but the foreign national will be limited to $2.5 million at most. 1 year's worth of income documents. They have up to 60% max LTV. They can have recent credit events that have happened in the U.S., but we do want between 2 to 4 years seasoning time frame. We would like to see 6 months of reserves for this program. We're working with a 50% max DTI. If they have credit established in the U.S., we're asking for a 680 minimum score or greater, if that is available. The asset depletion program starts at $100,000 as well. The foreign national will be capped to $2.5 million. Your U.S. borrowers can go up to as high as $4 million. If we're using other sources of income to qualify in addition to the assets, then it is considered full doc. This does have a 60% max LTV, 6 to 12 months reserves, 50% DTI ratio, and then a 680 or greater FICO score if credit's available for your foreign national borrower. For the J10 program, the borrower does have to have 2 years of work history, but they are only required to provide 1 year's worth of documentation. So if they are in a salary position, it would be equivalent of a W-2 plus 30 days pay stubs if they have that, or we will discuss what the alternative is. A 1-year tax return if they do have that, or what the alternative is there. If they have credit in the US, they will need to achieve a 680 credit score or greater. If they have no US credit, then they actually can qualify if they meet all the other criteria. The DTI ratio is 50%. Foreign nationals can use this to purchase or finance a second home or investor occupancy only. And it will be the lesser of 60% LTV, no more than 2.5 million loan amount, or whatever our 680 FICO requirements is, and which we'll be able to see in the matrix. So a foreign national can exercise a loan that's starting at 100,000, going no more than 2.5 million. On cash out, same thing, 60% LTV with a cap of 2.5 million max loan amount. 1 to 4 units, warrantable and non-warrantable condos are allowable, along with condotels. Everything is going to be maxed at 60% for a foreign national borrower. Gift funds are allowable. Gift of equity will reduce the LTV by 5%. And then if the borrower is using cash out proceeds to meet the reserve requirements, they will need to exercise at least 3 months of their own funds to meet the reserve requirements. And the balance can come from the cash out proceeds. The terms that are available is a 5-1 or 7-1 P&I arm, 5-1 and 7-1 interest only arm, or 15 and 30-year fixed term. Loans up to $2 million will require 6 months of reserves. Greater than $2 million will require 12 months of reserve. And then we just want recent credit seasonings on U.S. related credit. On the second home purchase or rate and term refinance, the foreign national will be limited to lesser of 60% LTV up to 2.5 million, or the 680 FICO requirements if they have credits. And here are the 680 FICO requirements. Whichever is lesser. And so all the matrices are going to be in here for your reference. For the sake of time, we won't go through all the matrices. They are available to you. We'll move on to the next program and we'll show you how it works. The asset depletion program, or A11, allows the borrower to use their asset portfolio to be the primary source of income to qualify, or as a supplemental. In order to use an asset account, the account does need to meet the following tests. The asset account has to be at minimum 110% more than whatever the desired loan amount is in order to even be utilized as a source of income. If it is less than that, it will be just looked at as a reserve account. Okay, so in this example, if a borrower wants to borrow $400,000, we do ask that the asset account has to be at minimum $440,000 or more. If it is, we'll take that figure and divide it by 60 months to determine what the income is. We'll work with a 50% DTI. If the number fits, then that account can be utilized as the either primary or supplemental. What is really nice is that the borrower, if they're using a retirement account, will receive 100% credit of that account. So no percentage will be deducted for taxes or penalties. As long as that retirement account is an unrestricted account and the borrower is fully vested in order to use the funds. So in this example, if our borrower, Juan Fernandez, is 49 years old and he has a Voya account that currently has $650,000, and he is borrowing $400,000, so we need the account to have at minimum $440,000. Since he has $650,000, that is greater than the $440,000 requirement, we'll be able to use the entire $650,000. $650,000, divide that by 60 months. This is not the term of the loan. It is just an aggressive calculation that we use to determine income. So the term of the loan can be a 15-year, a 30-year, or an ARM that's available, 5-1 or 7-1. So on $650,000 divided by 60 months, that equals to $10,833 per month in qualifying income. That number will be applied towards his DTI ratio. And if the DTI is at 50% or less, we'll just use only the $10,833. If the $10,833 is not enough, causing the DTI to be greater than 50%, then he can introduce other sources of income to help him qualify. Qualifying sources of income are as follows. A foreign national borrower can use, if they have funds here in a domestic account, we could use that. If they are self-employed, then, or if they want to use a business account, they have to be self-employed, and whatever percentage of ownership they have in the business will determine the percentage of assets to be used. So for example, if the borrower has 25% ownership in their business, then we'll only be able to use 25% of the business funds towards our asset depletion calculation. If they have a retirement account, like we mentioned, they will get 100% credit of that. If they want to use stocks or bonds and options, which are Fannie Mae acceptable sources, we'll give them 100% credit of that. And that would even include stocks that are in foreign accounts. On the asset depletion program, the borrower, if they have U.S. credit, will need to have a 680 score or greater. Working with a 50% DTI, we are starting loan amounts is $100,000, going as high as $2.5 million. The borrower can use this program for either a second home or investment property. Do keep in mind that they are limited to 60% max LTV. And if the borrower, again, does not have U.S. credit, they are still eligible. In regards to how will we determine what the conversion rate of the funds, the 1003 application date will determine the exchange rate used for the conversion of funds. So keep that in mind. If they are using that asset account to also pay the down payment and closing costs of the transaction, the net number in that account still has to be 110% more than the desired loan amount. If it falls beneath that, then that account will no longer be acceptable, or a multiple amount of accounts. So again, it doesn't have to be just one. It can be a combination of accounts. But if you take funds from those accounts and apply it towards the down payment and closing costs, the net number, if it falls less than 110% of the desired loan amount, then the accounts no longer become eligible. So just keep that in mind. Reserve requirements, again, up to $2 million will be 6 months. Greater than $2 million loan amounts will be 12 months. And then reserves will also be increased if the borrower has U.S. investment properties that have mortgages on them, and that it's listed here. Mortgage history, 30-day late in the last 12 months is acceptable, with none in the last 6 months on any U.S. related mortgages. Keep in mind that foreign nationals are going to be limited to the lesser of 60% LTV up to $2.5 million, or the 680 FICO, whichever is lower. So please refer to the matrices. And we have it broken out between second home and investment property, and also purchase rate and term versus cash out. It's all broken out here. So on the J10 and A11 programs, we do require income, they are considered full doc programs. So if you are utilizing their income to qualify, this is the requirement list. It will require the borrower to furnish documents that are translated into English using a third-party vendor. If they are a salary wage earner, we are looking for 1 year W-2 plus 30-day pay stubs of borrower's country equivalent. So if they participate in a system where they generate a W-2 and pay stubs, that will be acceptable. If that country or that employer does not participate in this type of system, the borrower will need to go to their employer and ask them to map out their income for that year to date along with the previous years, breaking it down on company letterhead. If they are self-employed, then we are asking that they have a history of being self-employed for continuously 2 years, most recently. And then they can provide a CPA letter stating the borrower's income for each of the past 2 years expressed in the borrower's home currency and U.S. currency. And that actually, we only want 1 year of income, 2 years of history. So we'll correct this when we send this out. We also ask that the CPA provide their business license to legitimize the letter. If the country has a tax return system, they can provide 1 year's tax returns. And then if that business has any license requirements, we do ask that they furnish that. If that borrower owns rental income in other countries, they can use that as a source as well. Copies of the leases, copy of 3 months worth of bank statements showing the receipt of the rental income, and translation of all the documents. If the foreign national borrower has other income, a letter from the foreign national borrower's CPA on accountant's letterhead describing the nature of the income, the amount of the income received by the foreign borrower, the likelihood that it will continue over the next 3 years, and a copy of the accountant's license must be obtained. Lastly, we have our I-10 program, which is our debt service coverage program. This is where a borrower can use this program to acquire or finance a rental property. And we're not going to be looking at the borrower's income or debt ratios to qualify. Rather, we are looking at the property itself and how much rent is going to be generated on this property. So as long as the rents come in 15% more than the proposed payment, that is how the borrower will qualify. If the property currently is rented, we will complete a debt service calculation and compare it to the rents that come on the rent schedule on the 1007. The lower of those two numbers will be what's going to be compared towards the new proposed payment. And as long as those rents are greater, then that's how the borrower will qualify. This program is allowable on 1 to 4 units, warrantable and non-warrantable condos. If the borrower has credit in the U.S., it'll be a 680 FICO score or greater. Minimum loan amount starts at $100,000. Max LTV is 60%. If the property is in Illinois, they will not be able to choose interest only. And the borrower will be signing a business use affidavit, as the intent of usage on this program specifically is business purpose. And what do we mean by that? So this program is very strict in the fact that the relationship between the borrower and the tenant has to be a landlord-tenant relationship, no familial ties. So the borrower cannot be having their family member as the renter. It has to be somebody who is not related to them. If they were taking cash out on a rental property they own, if they were designate, oh, can you just pay off all the credit card bills that I have on my credit report, that is looked as personal use. If they are taking cash out and they say they are going to reinvest it in their business or buy other properties, then that qualifies as a business purpose transaction. So the funds must be pointed to a business type of transaction, either it be reinvesting in the business or acquiring additional properties for their business, and they must have a tenant that is not family related. So here's an example of a debt service calculation if the borrower already has the property rented out. What we'll do is you'll plug in all these figures from the calculator, and what we're looking for is the following. So we will give the borrower full credit of their rent. So they collect $2,200 a month, they get full credit of that. We'll subtract out all the fixed liabilities associated with running that property, which are examples like property taxes, homeowners insurance, etc. So $2,200 is the gross rent. The fixed cost to run this property is $385. That will be subtracted from $2,200. $2,200 minus $385 gives us $1,815. This borrower is looking to take a loan out for $200,000, going with an interest only, 5/1 ARM at 7.5%. That monthly mortgage payment is $1,250. We definitely have more rents, more rents than what the obligated payment is. But we'll have to compare this number to the rent figures on the 1007 appraisal report, and we'll take the low over the two. So this calculation gives us $1,815. Let's say we get the rent schedule back from the appraisal report, and it says rents are going for $1,700 in the area. $1,700 is still greater than $1,250, so this borrower qualifies, and that's how easy it is. So again, the foreign national borrower is going to be limited to lesser of 60% LTV up to $2.5 million, or whatever the 680 FICO requirements are. Okay. All this information is similar to what we talked about, and with the other programs, that's going to be very universal. So I'd like to just focus on some details to know about non-owner occupied business purpose loans. One, the borrower doesn't have to have previous landlord history or mortgage history to qualify. That is not required, okay? And this loan is not designed for primary or second home occupancies. It is designed specifically for investor occupancy only. If the borrower would like the title vesting to be held in an LLC or corporation, that is allowable, or if the property already is in an LLC or corporation, they can transact as so and not have to take it out of that in order to complete the transaction. On the debt service coverage program and the other two, if you are writing a loan for an investor occupancy, there is a 3-year prepay penalty and there's no buyout option. If the property is located in states that do not allow for prepayment penalty, Alaska, Delaware, Minnesota, New Hampshire, New Mexico, or Ohio, one will not be imposed. The loan that is designed specifically for business purpose is considered non-TRID, which means a shorter turn time, no more than 2 to 3 weeks. These are the available terms that are available for the debt service coverage program. And so with regards to prepayment penalty on any investor occupancy, what does that look like? So investor occupancy loans do have that 3-year prepayment penalty with no buyout options. The penalty is 6 months of interest on 80% of the original balance. A borrower can pay towards their principal balance, but no more than a 20% total in paying down their principal balance on an annual basis. If they go up more than 20% of a payment in that year, then it will trigger the prepayment penalty. So a borrower can pay no more than 20% in those first 3 years. If you have a borrower that would like to exercise a power of attorney, then these are the requirements. It has to be recorded and insured by a title company, not permitted on cash out transactions, so keep that in mind. It has to be specific to the transaction, so it cannot be a general POA. It has to be specific to this transaction. It has to be executed by all parties that are on the 1003. It will need to be approved by Sprout and title company. No conflicts of interest among parties. Must be notarized by a U.S. embassy or consulate. And 2 original POAs are required. We do have a current update due to recent immigration laws that has been affected by COVID-19. So this does have an effect in regards to loan closings. So recently there has been a new mandate put out that will that actually restricts foreign nationals in entry into the United States. Along with the United States Embassy being closed in the borrower's home countries, we may see a delay in the ability to actually close a foreign national loan. There are two options to close a foreign national loan. One, have the borrower present in the United States and have the mortgage executed and notarized, or have the borrower close in their home country at the United Embassy and have the mortgage executed and notarized. So at this time, there are no other options to perfect our lien and give us the ability to enforce our mortgage if needed. Please be aware of the limitations we have made and to make sure that your borrower is aware of the current situation. As the immigration law changes, we'll continue to keep everyone updated. And please know that this is beyond Sprout's control, and until restrictions are relaxed and or the United States Embassy opens, then we must follow the mandates accordingly. Okay. Lots of information. Perhaps you're overwhelmed. Don't worry, your account executive is available along with our loan scenario group. If you have a scenario or you have questions regarding your borrower situation, not only is it for foreign nationals, for any borrowers that you may have that you think may fit into one of our programs, please leverage our resources that we have available. If you'd like to send over a scenario to see what is going to be the best fit for your borrower, it helps us out by having a 1003. You can put TBD in the subject property so that RESPAs are not going to trigger. A credit report, whatever documents you want us to review. Is it bank statements? Is it income documents you want to be reviewed? Or is it perhaps a non-warrantable condo that you want us to look at? Whatever the scenario is, you can send that over by uploading all this information into the scenario request field, or reach out to your account executive and discuss it. And then they can advise you on how to send it over to us. We also have, here is the telephone number to our loan scenario desk if you want to actually speak to somebody. Here's the number, and then hit option 2 so that you can be connected with them. So if you are interested in utilizing our marketing materials but you don't have access to the marketing store, reach out to your account executive so that they can provide you access to that. You'll have access to all the materials free of charge if you're using the digital copy of the collateral. You also have our resources to help you train your branch team or even your realtor referral partners. If that is something of interest to you, please reach out to your account executive to discuss it further. If you currently have a loan that you're working on that you're about ready to submit to us, make sure that those that are using our TPO portal do attend a portal submission training to get acclimated with how to use our system. It's not difficult, but it is also not easy if you're flying blind. So that's why we do ask that the user does attend a session. It takes no more than 30 minutes. It's a live demo taking you from the very start all the way through post-closing. This happens every Monday and Thursday at 10 a.m. Pacific. Here are the details. So with that said, we do appreciate your attendance. What I'll do is open up the line for questions. So I have unmuted the line. So you'll just have to unmute yourself if you wish to ask a question live. And then I will also look to see if there's any questions in the chat box. Bear with me. First question, can a foreign national notarize the POA at the U.S. Embassy? Yes, that is acceptable. So let me go back to that screen just so that you have actually here. Yes. So can be executed notarized either if they cannot be present in the United States and then they're in their home country, they'll have to go to the U.S. Embassy and have it executed and notarized. Okay. Great question, Yasmin. Bear with me. Again, if you wish to ask a live question, just unmute your line individually, and you'll be able to we'll be able to hear you. Okay, give me 1 second. This little question box is kind of tiny, so okay, let's go. Are there prepayment penalties on the loan? Yes. If it is an investor occupancy loan, it does have a 3-year prepay penalty. For Paul asking for a recording of this, yes, it will be sent out by end of business day today. So just make sure you include your email address. If you didn't register on GoToWebinar, then just make sure you put it here in the chat box so that we know where to send the information to. Bernie asked, does the 3-year prepay penalty reduce each year? No, it is a hard 3-year prepay penalty, so it does not reduce. And the penalty is 6 months of interest on 80% of the original balance. So if they are 2 years, 1 month in, and then they wish to, to refinance at that point, then we will not, will not adjust it. It will just be the same requirement, which is 6 months of interest on 80% of the original balance. Okay. Okay. Our foreign nationals, okay, let's see. If I qualify for foreign nationals and it's self-employed using CPA letter, what kind of document type I have to choose? Okay, so you have a foreign national borrower that is self-employed. You have to select, you can't select bank statements, you'll have to select tax returns on the I qualify engine for it to understand. Because for self-employed borrowers, we are requiring the full doc requirements, so they will not be able to utilize their bank statements as the source of income. Hopefully that answers that question. Where do Bernie wants to get the matrix? We'll be emailing everything out, Bernie. Also, you can get a copy of our guides that can be found on our website as well, but the information from today's session will be emailed out to you. So the cash out, Bernie, if you're looking for a U.S. person, the max cash out is 70%. If it is a foreign national person, they're going to be maxed out at 60% with no loan greater than 2.5 million. So hopefully that clarifies things. So if it's a U.S. person, they are able to go to 70. If it's a foreign national, they are limited to 60. Rob wants to know, is there any further LTV reductions for condotels? Condotels is maxed at 65% for U.S. persons, and for foreign nationals, they are going to be limited to 60%. So just know at the current time, any financing, any program, any property for a foreign national borrower at Sprout Mortgage, 60% is the absolute maximum they can exercise. Hopefully that helps clarify things. All right. Thank you, folks. for sending in your email addresses. You're welcome. What are your lender fees for the program? This question came from Michael. Our lender fees is going to, if you're a wholesale relationship with us, you'll be charged $11.95 for the lender fee, and then the third-party cost for all the other services that works out to be probably no more than $500 outside of that. Again, that's just rough numbers. You'll see what all the fees are on the submission checklist if you're submitting a loan. If you don't have a loan to submit, then please reach out to your account executive to discuss all the fees that are associated with the transaction. All right. So, folks, let me try again just to see if folks can, let's see. Yeah, I don't know why it is not allowing you to unmute. I've clicked on the unmute function, and I'm sorry if it's not working.
Now, if there is a reason why they need to send more information.
We can hear some folks.
Christine or someone.
Okay. Yep, so if you just go into the control panel and can click on the microphone and unmute yourself if you'd like to ask a question. I do know that, we're getting closer to, 10 o'clock. So if you don't have any more time to spend on this, we do appreciate your attendance. I'm going to check the inbox one more time here with questions. Are any of these programs for a foreign national with ITIN to buy a primary residence? So in regards to the ITIN, if that borrower has an ITIN number in here legally, then they can qualify. But if they have an ITIN number and are here illegally, then they will not have any finance options. So that's a little tricky, because if somebody is here who's lived here for the last 20 years and only has an ITIN number, we would automatically put them into the foreign national box, right? Because they are here with only an ITIN number, not here legally. But then, being a foreign national, they need to have the majority of their income and their life in a different country, which is not the case for that person if they lived here for the last 20 years. So for that person, they don't qualify for either or. And so they may qualify with another institution, but here at Sprout, they are either here legally, they have a permissible work permit along with a social security number, and they can qualify for any of the programs that we have available, or they will fall into the foreign national box, but that means they actually have to have a primary residence elsewhere. And if that's the case, then they would only be able to utilize our programs for a second home or investment property. So hopefully that clarifies that question. Are they on the rate sheet? Michael, are you asking about the fees? The fees, I don't believe, are displayed on the rate sheet. It is displayed on the submission document. If you would like to provide your email address, I can send you a copy of the submission document and you'll be able to see what the fees are. Okay, I believe this concludes. Okay, David would like to know current interest rates for foreign nationals. It all depends on the program, LTV, FICO score, if available, transaction type. So there's a number of components that's going to determine the rate. So you'll either use the iQualify tool or look at the rate sheets that we generate daily, or be able to run your scenario in your pricing engine to be able to say that. It's really hard to say based on programs and the eligibility of your borrower. So won't be able to give you an idea of what that looks like. But it is very fair and great options for foreign nationals to be able to get financing in the United States. Okay. I believe that concludes the questions that were sent out, and I'm sorry that you weren't able to unmute yourself. So should be able to ask any live questions. All right. Thanks so much, folks. If you are interested in next week's topic, it's going to be our entire product line. So be on the lookout for the announcement for next week's webinar Wednesday. Have a great rest of your week. Stay cool. Thanks so much for your time. Have a great day. Bye-bye.